Europeans are slowly moving away from cash, but the current alternative, the digital payment system, is fragmented into regional markets. And for international transactions, it's dependent on a handful of foreign companies that charge hefty fees. According to the European Central Bank, the move from cash threatens to leave the Eurozone without a sovereign universal payment solution. So when the European Central Bank invited me to Frankfurt to find out about one potential solution to this conundrum, the digital euro, I hopped on a plane to find out more. According to the ECB and their promotional material, the digital euro, which would be launched in 2027, would be one of the greatest transformations of the single currency since it started in 1999. And I'm here to find out what it is, what it could mean for you and the wider European economy, and if it actually is a good idea in the first place. So to understand what's going on with the digital euro, we first have to talk about what money actually is and how it moves around. In practical terms for you and me, it's either cash, or most likely, since my audience is quite young, it's a number on a screen that represents an abstract idea of value. But these different types of money all have pros and cons owing to the infrastructure and institutions behind them. They all have differences in why we trust them and how we can use them. In order to explain these differences, I made these very pretty drawings, and before I wasted a bunch of time animating them, I checked that they're actually correct with an expert at the European Central Bank, for good measure. We first need to understand how the two types of money we use today work. Let's start simple. This is a 10 euro bill that I have in my hand. Its value is guaranteed by the European Central Bank. And if I go to a store, I can use it to buy stuff, or I can simply give it to you. Moving this cash around actually costs money, either to keep it safe or when we deposit in a bank. We trust it because the European Central Bank says that's what it's worth, and because European governments tell us we have to pay our taxes using the euro. But say I have 10 euros on my bank account. That money is actually a promise by my bank that I can get those 10 euros in cash from an ATM. But I don't actually have to withdraw it to spend it. Thanks to the wonders of technology and a lot of trust in the financial system, I can pay by moving the promise of 10 euros in cash from my bank account to the bank account of another person, at the cost of some transaction and service fees to the banks and transaction companies, that is. But here we arrive at a problem. What happens in a world that uses less and less cash? What does the promise of cash mean when we no longer use it? This is not simply a hypothetical question. In just 6 years since 2016, the share of transactions made with cash has fallen by 20%. And in terms of value of transactions, cash has actually fallen behind card payments. And that's where, according to the ECB, this new piece of technology comes in: CBDCs, central bank digital currencies, and which is currently being explored by the ECB and the European Union in the form of the digital euro. This digital euro would be a new type of money, exchangeable with regular euros at your bank. And according to the results of the investigation by the ECB, the digital euro would be free for basic use, offering the highest possible protection of privacy, risk-free as money issued by the central bank, as well as promote European sovereignty. Before we actually check up on those claims of the ECB and look at how the digital euro would work for you and I, first a word from this video's sponsor, Speakly. For this video, I ended up going to Frankfurt, and I have to say my German was more than rusty, especially when I went out for dinner in a German restaurant. Having once reached B2 level in high school, I was quite confident I could get on with my life. But that was quite far from the truth. While I could order beer, the most essential of skills, 2 Bier bitte, 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 most of my German was gone. I was curious about the science behind learning new languages, and the key is vocabulary, but not just any vocabulary. According to Speakly's own research spanning thousands of conversations and 6 years of studying, you need to know the 4,000 most common words to be able to speak a language fluently. In fact, you might be able to get away with 2,500, with each new word offering diminishing returns. And it's exactly this research that the Speakly method is designed around. Instead of structuring lessons thematically, like about the vocabulary of swimming pools, it focuses on bringing you up to speed on those useful words. With 10 words a day, your language skills would be brought up to fluency relatively quickly. And what I really love is that the app also offers music and podcasts in the language you're trying to learn, putting you in touch with people who are actually saying and how they speak. Speakly is available both on web and mobile, both Android and iOS, so click the link down below and start learning some useful new languages today. Try free for 7 days and get a 60% discount if you join the annual subscription. Now back to the video. So how would the digital euro work for you or I? At first glance, this would look a lot like a regular bank account, especially since your digital euros would be on a wallet provided by your bank. But unlike other digital currency, the digital euro, much like cash, has its value guaranteed by the ECB, which means that even in the event of a bank run, your money would be safe. And according to the current plans by the ECB, it would work in two main modes, online and offline. The online mode might seem familiar. You could scan a QR code or swipe your phone to buy things either in stores or online. These digital euros could then be converted into cash, be turned into promises of euros, or continue circulating as digital euros in someone else's wallet. For the offline mode, you could deposit money on an offline wallet to transfer to another user or business without an internet connection, allowing you to, say, pay with your phone in an isolated mountain hut on a hike. Essentially, these transactions would happen without being centrally processed. But Hugo, isn't that what we currently have with existing types of money and payments? To which I would answer mostly yes. And that's kind of the point. It's designed to be as much like the current system as possible. Based off the documentation I have read, the plans of the ECB, and my chats with their experts, apart from the potential of an offline payment solution for a somewhat digitally savvy user, it's not exactly groundbreaking change. The offline version, which aims to be cash-like both in its use and privacy, is perhaps the major innovation, and currently isn't possible with the systems we have. But is the digital euro actually a game changer? Well, there are other important differences, and in order to be able to spot them, we have to take a look under the hood of the ECB's proposal. So let's go back to the original claims made by the ECB and the conceptual drawings that I made to try and understand how the digital euro would work. There are 4 particular claims that I want to check: whether it's free, whether it's private, whether it takes away risk, and whether it actually is advancing European sovereignty. And as any marketing campaign, these are quite some impressive claims. The ECB says that the digital euro would be free for basic use. In other words, it will be given out as a public service. You see, since the ECB would take over the settlement of payments in digital euros, this would potentially cut out the companies coordinating digital transactions, most notably Visa and MasterCard, but potentially many of Europe's other regional companies. That's not per se a bad thing, especially since in the case of MasterCard and Visa, which are the safest bet to pay across European borders, the scheme fees they charge tend to be quite significant. Even if the digital euro doesn't take over, it might put pressure on these transaction companies to lower their fees, to the benefit of small business owners and even you if the savings are passed on. The other actor, commercial banks, aren't too happy about the digital euro either. You see, banks would be legally obligated to provide you with a wallet for your digital euros and basic services, in principle free of charge, which could compete with some of the other services of these banks. Under the current proposal, they would not be able to use your digital euros to lend out money, potentially affecting their bottom line. To limit this potential loss and also avoid bank runs with people putting all of their money on their digital wallets, the ECB has looked to make the digital euro less attractive. It has suggested 3,000 euro limits on deposits and no interest to make sure people don't put all their savings into those same digital wallets. In fact, commercial banks have sought to limit the digital euro even further, with the CEO of BNP Paribas, a French bank, asking for a limit of 500 euros on the digital euro. Paradoxically, even Fabio Panetta, a member of the executive board of the ECB, has said that the digital euro shouldn't be too successful as to push out banks and financial intermediaries. So now that we understand who would be the winners and losers, a question is whether the system as a whole would actually be cheaper to run. After all, the system for the digital euro would exist in parallel to the transaction system for banks. Keeping both running will mean additional costs, either for consumers, the shareholders of transaction companies, or in the case of the digital euro, the European taxpayer. Another important claim is that the digital euro would have the highest level of privacy protection. And that's a big statement, especially since the ECB would fill a key role within the settlement system of the digital euro. While privacy groups have voiced their concerns at the centralization of information, the level of privacy for the online digital euro seems to be on par with current digital transaction, since the ECB would not be able to see transaction details. When it comes to the offline digital euro, which aims for cash-like levels of privacy, your bank would know when you withdraw money and when you deposit money, but there would be little trace of what you do with it in between. While this offers a degree of anonymity, and ECB President Christine Lagarde's own words, full anonymity, such as offered by cash, does not appear a viable option, since it would contravene compliance with anti-money laundering rules and combating the financing of terrorism. So while the digital euro would be comparable or better than online transactions as they currently are, it would still be inferior to good old cash when it comes to privacy. Then the ECB makes the claim that the digital euro is risk-free, since it is a deposit with the central bank, meaning that in the event of a bank failure, you would still be able to access your money. But since bank deposits in the European Union are guaranteed up until 10,000 euros, your money is also quite safe. It just might take longer to get back. And the last issue is that of European sovereignty, which is one of the major motivations for developing the digital euro. It would be a universal European payment solution controlled by Europe, but only if the building of digital infrastructure, which is set to be tendered out, is built by a European player. While the market study by the ECB shows that there is a sufficient pool of European providers able to tackle the challenge of developing digital euro solutions, and the ECB has told me that Eurosystems is confident it can build some of the things itself, it could still very well be that the very same companies that are dominant in international transactions, namely Visa and MasterCard, end up playing that role for the digital euro as well, especially since the digital euro plans on relying on existing standards and solutions. Maybe I'm being too skeptical here, but in my defense, it would be the first time that the EU attempts to reach digital sovereignty, only for American or Chinese companies to end up dominating the initiative. So for one of the ECB's major selling points on the digital euro, we'll have to wait and see how the tendering process goes, and if European providers are actually able to deliver and compete. But if we go back to the pros and cons list, the digital euro plans on being a new type of digital money with its own transaction system supported by the ECB, but provided by your commercial bank, which has some additional features in the form of offline payments. The potential economic benefits seem clear: lower transaction fees and further integration of the European market, at least for consumers. And so is the risk, a potentially expensive parallel system for which European taxpayers will have to foot the bill. So are there any other options to the digital euro? Where there have been ongoing private attempts to create a European payment solution like the EPI, the European Payment Initiative, which have been ongoing for 15 years and have seen their ambitions reduced every time the project is put on hold. But this could be the subject of an entirely different video, so I'll leave it here for now. But what do you think? Is the digital euro something you would use? Let me know what you think in the comments down below. If you want to learn more about the digital euro, then go check out this video from Money and Macro, where he interviews the expert featured in my video, Evelyn Cox, who I also had the opportunity to chat with, or this video about the challenges facing the European economy. And once again, go check out today's sponsor, Speakly. Try free for 7 days and get a 60% discount if you join the annual subscription.